All right, we're going to pull back the curtain on a side of the stock market that most people never ever see. We're talking about a hidden world where billions of dollars move around completely in the shadows.
So think about it. You watch the ticker on TV, right? You see the charts on your phone. But what if that's not the whole story? What if there's this entire other market, a parallel universe of trading happening completely out of sight?
So check this out. Even way back in 2011, a huge chunk, over 13.5% of all US trading volume, was happening in these things called dark pools. These are private exchanges totally hidden from public view. And guess what? That number's only gone up. So this brings us to what we call Wall Street's hidden layer. I mean, think about it. If you're a giant pension fund and you want to buy 1 million shares of Apple, you can't just hop on your trading app and smash the buy button, right? The price would go to the moon before your order was even halfway filled. They need a quiet way to move enormous blocks of stock without making a big splash in the market. And this is where it gets really interesting. Even though these trades are meant to be super stealthy, they're not totally invisible. Nope. They leave behind this trail of digital breadcrumbs, little clues in the data that, if you know what you're looking for, can tell you exactly what the big dogs, the smart money, are planning to do next. All right, so where do we start our investigation? Well, our first stop is something called options flow. You can think of this like listening in on a private conversation between the most informed traders out there. It's one of the best places to start finding those breadcrumbs. So what is options flow? It's basically the live, real-time fire hose of every single options trade happening right this second. Now, to the untrained eye, it might just look like a bunch of noise, right? But if you know how to filter through it, it can be an unbelievably powerful leading indicator. It's kind of like getting a sneak peek at a stock's next big move. Okay, so inside this river of data, there are a few key things you need to know. First up, the block trade. This is your classic textbook huge order. It's privately negotiated between two big institutions, specifically to avoid making any waves in the public market. But a sweep trade? Whoa, that's a different beast entirely. Instead of trying to be quiet, the trader is basically screaming from the rooftops, "I need to get into this trade right now." They're blasting their order across every single exchange at once, and they care more about speed than getting the perfect price. The keyword here, the thing you absolutely have to remember, is urgency. And that brings us to a holy grail, the top-tier signal, the golden sweep. This thing is the whole package. It's a massive trade, we're talking over $1 million. It's a sweep, so we know it's urgent. But here's the real kicker. The size of the trade is bigger than the existing open interest. Let me say that again. They're opening a brand new position that's bigger than all the other existing contracts combined. That's not just urgency, that's insane conviction. Okay, so we've found the clues in the options market. We see the breadcrumbs. But where are the giant stock trades that these options are connected to actually taking place? Well, for that, we have to venture into the secret venue itself, the dark pools. You know, it's really a tale of two different markets. On one hand, you have the public exchanges, like the New York Stock Exchange. Everything there is lit. It's transparent. It's out in the open for everyone to see. And then you have the dark pools. They are the complete opposite. They're anonymous, they're opaque, and their entire reason for existing is to let institutions move huge amounts of stock without anyone knowing what they're doing. I mean, the source material says it perfectly. These are basically private stock markets. They're over-the-counter exchanges built from the ground up just for the institutional heavyweights. So, you might be asking, why should I care about this? Well, it's because when you start analyzing the data that leaks out of these dark pools, what we call the prints, you can find some incredible stuff. We're talking about clues to upcoming market moves, the very beginning of a new trend, or even a reversal. You can find these hidden support and resistance levels where the big money is quietly buying up shares. You can even spot the late prints. These are trades that institutions try their best to hide from you. Okay, wait a second. We've found the clues, we've found the secret hideout, but how? How do these options trades and these hidden stock prints actually have such a huge, powerful effect on a stock's price? What's the actual engine that makes it all work? Well, the answer, the final piece of this entire puzzle, lies with the folks sitting on the other side of all these trades, the market makers. And believe me, their actions can create one heck of a powerful feedback loop. Now, first things first, you have to understand something crucial about market makers. They are not betting on which way the stock will go. They don't care if it goes up or down.
Think of them as neutral. They're just there to provide liquidity, and their number one job, their only job really, is to manage their own risk. So, how do they manage that risk? Through a process called delta hedging. Let's make it simple. Say you go out and buy a call option. The market maker who just sold it to you is now technically short that stock. To get back to neutral and cover their risk, they are forced, and I mean forced, to go out and buy a certain number of shares of the actual stock. This isn't a choice for them, it's just the cost of doing business. But here's the thing, that hedge isn't a set it and forget it deal. The number of shares they need to own changes constantly as the stock price moves around. And the rate of that change, that's called gamma. The easiest way to think about gamma is just as the accelerator pedal for their hedging. High gamma, and that pedal is pushed to the floor. And this, my friends, is how a gamma squeeze is born. It's this incredible self-reinforcing feedback loop. So follow me here. Step 1, a massive, and I mean massive, wave of people start buying call options. Step 2, the market makers on the other side sell those calls and they immediately have to buy the stock to delta hedge. Step 3, all that buying starts pushing the stock price up. And here's where gamma, the accelerator, kicks in. Step 4, as the price rises, the options delta shoots up, forcing the market makers to buy even more stock to stay hedged. And that forced buying, step 6, just pushes the stock price even higher, which forces them to buy more. You see the cycle? It's a squeeze. Okay, wow. We've peeled back a lot of layers here. So what's the big takeaway? What's the bottom line? How do we actually use this knowledge about the market's hidden plumbing? It really all boils down to watching for a few key signals. First, you're looking for urgency. You see that in the sweep trades. That's your get in now signal. Second, you want conviction. You find that in those big, way out of the money bets. You know, when someone is betting millions that a stock is going to make a huge move. Third, you're looking for aggression. That's when traders are literally paying more than the asking price just to get their order filled. And finally, you're looking for those hidden levels, the spots where dark pool prints are piling up, showing you where the big money is building a floor or a ceiling. You know, at the end of the day, this isn't about having a crystal ball that predicts the future. It's really about seeing these massive, powerful currents of institutional money moving just beneath the surface. The goal isn't to try and fight that current, it's to figure out which way the tide is flowing and just swim with it. And the source material really hammers this point home. Following these prints, this hidden flow of money has proven time and again to be an incredibly powerful leading indicator. It's like finding the footprints of giants in the sand, giving you a pretty darn good clue about where they're headed next. And that really leaves us with one last question to chew on. In a market that's intentionally designed with these shadows and dark corners, who really benefits when we, the public, finally start to shine a little bit of light in?